Thank you, Mr. Chairman. Mr. Secretary, first of all, thanks for being here and for your service to our nation. I'm going to come back in and talk a little bit on the technical side for just a minute. The FSOC's 2025 annual report recommends that its member agencies use the Council's Artificial Intelligence Working Group to identify regulatory impediments to the responsible adoption of AI by financial institutions. From your perspective, what are the biggest impediments today that prevent banks from adopting AI responsibly, especially for compliance, fraud detection, and risk management?
Well, as you know, AI is an exciting and new technology, and there's a great amount of learning to do here. So FSOC, Treasury, the regulatory agencies are working with our private partners to implement in a gradual way robust usage of AI. AI can be a great tool, but we have to also think that AI can be a risk through state and non-state actors. So it is a public-private partnership, and we are pushing very hard across the agencies and at Treasury.
FSOC's report also recognizes that overly complex and subjective supervision, like reliance on vague concepts such as reputational risk, as you mentioned in your opening statement, restricts valuable activities. Given FSOC's push for clearer standards and responsible AI adoption, would a time-limited AI sandbox for financial institutions with clear guardrails help firms test AI tools in a controlled setting while regulators evaluate risks and benefits?
Senator, that is clearly the one very interesting option, and we are considering that moving forward. We'd be happy to work with your staff on that.
I feel very passionate about that part of it. I would look forward to working with your team as well, sir. I'm also just curious. We've talked now, and the discussion will go on and on about how we build the economy and so forth. But I think just for the American public, since they probably don't get an opportunity to just have a back and forth with the Secretary of the Treasury very often, let's talk a little bit about how we really reduce the price of getting a home for an American family. I think a lot of it has to do with bringing down the interest rates that charge in the 30-year mortgage. Can you share with us a little bit, we talked about treasuries and you mentioned that the rate of treasuries, the cost of treasuries is coming down. Can you share a little bit about what it takes to bring down the price of treasuries with regard to the growth of GDP? And when treasury rates come down, what that does for an average American home buyer who's looking at a 30-year mortgage?
Well, I'd be glad to, Senator, because President Trump is focused on Main Street and not Harvard Square. So a mortgage rate is two components. We could say that it is a derivative of the 10-year, but it's really a 7.5-year. And we have seen that decline. And then it is the spread between the 10-year bond and the actual mortgage security. And we have seen that is at multi-year lows. So what we saw in January was the lowest mortgage rates in almost 3 years.
We've got $37 trillion in debt. A lot of the folks back out there saying if you've got that much debt and you're paying interest on it, that competes with folks that want to loan you money on a mortgage. Can you talk about what it means to build GDP and how someone who is looking at laying out bonds and so forth as you build GDP, what that does and how that impacts a homeowner?
Well, yes, because two things, sir. We brought down the fiscal deficit for the calendar year. So from 2024 to 2025, at 2024, the deficit to GDP, which is a very important number, was 6.97%, highest when we weren't at war or in a recession. We brought it down to 5.4. That was a combination of the holding spending and growing the economy. And as we continue to do that, interest rates will naturally decline, and it pushes out inflation. What we could see from an MIT study was that the Democrats' spending that was responsible for almost half of the great inflation. The overspending, according to MIT, was responsible for that and penalized American homeowners. So by controlling the budget, growing, and in a responsible way, we will bring down mortgage rates. And I would say that building costs are now down in the year.
Thank you. Thank you, Mr. Chairman.
Yes, sir.